Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us. Mayuresh, good afternoon. Good to have you on the show. So let's start off with Pharma, because Ekta has given us a quick capsule to summarize the Q2 expectations. How are you positioned on the sector, and what would your top picks currently be?
Afternoon, Surbi. Always a pleasure to be on your show. On our global focus list, two stocks prominently stay. One is Cipla and one is Sun Pharma. As Ekta was mentioning, obviously Revlimid is going to be a key contributor. Quarter on quarter, the number in absolute terms might be a little bit off. But the expectations with both these counters, in the case of Cipla as an example, the respiratory drug portfolio and the launches of Advair, the expectations in terms of complex generics like peptides expected to get launched in the next few quarters. And the expectations of the management keep EBITDA margins between 22 and 24%. I think that is something which will keep earnings very, very buoyant for Cipla going forward. Obviously, I think what happens onto their FDA, with FDA concerns onto their plants is something to be seen. But the bottom line growth should also be equally strong, with these expectations probably getting built in. Even for Sun, as an example, both the domestic formulation business, like in the case for Cipla as well, both the acute and the therapeutic chronic therapies should probably continue doing well as we head into the next few quarters. And US formulations should hold up for Sun Pharma. Margins around at 27% for the larger part of this financial year, with R&D expenses to be around 5.5% for Sun and around 6.5% for Cipla. They've got almost 98 ANDAs in the pipeline, a few of them complex as well, like in the case of Cipla, which if launched in the next few quarters, can have a significant impact in terms of earnings. So Sun Pharma and Cipla, Surbi, stand prominently out in our global focus lists.
Bajaj Finance is going to go home as the top nifty loser, a cut of close to about 3%. Mayuresh, numbers were okay. It was a decent set of numbers. They're getting back to acquiring customers. There has been a pretty good 5% pickup in the customer additions on a quarter-on-quarter basis. What explains this 3% fall, and how would you approach this cut today?
So afternoon, Reema. I think numbers were pretty decent, and with the kind of update that they've probably given, more or less in line with what they were believing could get delivered. Having said that, the overall AUM growth, an absolute number of 290,000 with a growth of 33%, I think that is an exceptional growth in terms of both AUM that they have done quarter on quarter and on an annualized basis as well so far. The OPEX to NII is a very interesting number, because that has now come down to 34%. And as their digital capabilities built in more with their app in the next few months and quarters, a lot of these operating expenses are going to come down even further, creating more leverage in terms of how bottom line will probably look at. And therefore, the reported ROE was at around 24.1%. And with gross and net NPAs both coming off, net NPAs at 0.31, a strong addition in terms of new loans that have got added on the existing base itself. I think it's done a pretty good job. I think what the street probably believes is the impending competition that can come in from Geo Financial in a few of their verticals in which they are probably present, consumer durable loans to be more specific in the next few quarters, and whether that can have a huge impact on Bajaj Finance. But I think there is a huge market out there. And at the end of the day, Bajaj Finance is a qualitative franchise. So I'll not be too perturbed. Anybody holding on to the stock should hold on to this qualitative franchise.
All right. Mayuresh, we'll leave it there. Thank you very much for joining us and running us through your perspective on things.